This is the Moniology on Markets Uranium Sector Review for January 12th, 2019. Overall, the sector has been pretty volatile in a range. It bottomed out in latter part of last year and it started rallying, but as you'll see on the weekly chart, it did not break through the RSI trend line. So there's still a lot of indecision in this market, and a lot of it depends ultimately where the overall markets go. If the overall markets pull back and resume their bear market, then I can't envision how uranium sector starts breaking out under those circumstances. But let's look at the individual names to see what's going on, and let's try to make some profits here. Okay, so let's start with the Uranium Global ETF URA on a weekly chart. So this is what I'm referring to. So we are in this bullish wedge consolidation over the last 12 months basically, and we're trying to break out of this RSI, this momentum pattern, and we're close, but we're not there yet. So from a longer term standpoint, this is not a buy until both of these trend lines, ideally this trend line, can break out of this downtrend. And what's good about it for the uranium bulls is that it's very close to the 50 RSI line. Should that break to the upside, the move can be very powerful and very quick. So obviously, if you're a fundamental investor, this is a great opportunity to accumulate the best positions based on a fundamental basis and watch them rally as the uranium sector breaks out whenever it does. So here's a daily chart. We had a nice run up here, and one that we called, and one of the reasons that we expected this run up is if you see there's a positive divergence between this low at 1095 and this low at 1148. Momentum was higher at the lower low than it was when we were at 1148. So that suggested that this particular low was not going to be one that would seek continued lower prices, and we saw a rally. Now we broke above the 50-day moving average, and now we're struggling below the 200 moving average. So let's see what happens here. Right now you've got this 60 level RSI serving as resistance. There's positive divergence here between highs that have been hit previously, so it's very interesting. If it can bounce off the 50 RSI level after this brief consolidation, I think that we indeed can move higher. You're seeing a lot of positive strength in a lot of these names, so let's see what happens. So on the hourly chart, we've had a pullback here a little bit. We closed below the 50 RSI level, which is not necessarily a good thing. However, I will say that this level right here is where we rallied from starting in January 4th. So let's see what happens here with the 50-hour moving average serving as support below, as well as this RSI point of support. If we can curl back higher and recover this 50 RSI, that could be a very positive sign. But look at this money flow. It is dropping off pretty substantially, so it will be interesting to see the next moves in the space. Now, looking at some names in the sector that are pretty interesting. So we've got Western Uranium and Vanadium. Obviously, it's done tremendously well since it broke out of this rounded bottom here, and it made a really nice run. It had a negative divergence here between these two highs, and the pullback was understandable. We called the pullback to about $1, and it just broke that dollar mark, and the question is what happens now. I think that we'll probably retest this bottom at 96 cents. We couldn't quite break out of the 50 RSI, which means that the momentum still is not there in this name. It might consolidate here a while longer, but again, I'm not doing this analysis on any fundamental level. So if this is a great level to buy from a fundamental perspective, this is a great time to accumulate. Could it go down to 80 cents? Absolutely, but 80 cents to $1 in the long run is not such a big deal. So use these opportunities to accumulate if the fundamentals suggest it. UEX Corp. This one has been in a nasty downtrend here for a while, but I will point out that the downtrend has been broken to the upside. Now, it's retesting it from the upside. If this can hold, if this 40 level in RSI can hold as a back test, that could be a positive development. So keep an eye on it. Obviously, you've got the PPO curling to break above zero, so this can run pretty dramatically if this breakout is indeed legitimate. Uranium Energy Corp, UEC. This one had a double bottom that we called here at 120 and 112 with positive divergence. So the rally to 130 is not a surprise. You see PPO momentum starting to move towards a break above zero. You've got this triple resistance with the middle Bollinger Band 50-week moving average and the 50 and the 200-week moving average above it around that 145 to 150 level. So that's going to be a struggle to break above, especially if the overall markets are resuming their weakness. But if that breaks, that's your point to buy this particular name. It's got tremendous fundamental story behind it. It's got good management, despite what some folks might suggest. And if it breaks higher, this can make a run towards $3 in no time. Energy Fuels. This one's been basically, it's consolidating here, very positive consolidation, kind of a bullish flag right below the 200-week moving average. It's finding support above the 50-week moving average, and it's got a lot of volume coming in here. So even though during this consolidation the price hasn't moved all that much, momentum has been getting weaker, which is not a bad thing. That means it's just a good time for the stock to really recapture its energy, internal energy. We closed the week slightly above the 50 RSI level, which is very important. If it can recapture it higher, that's your sign that this wants to move higher. For me, I don't buy this until it breaks above the 200-week moving average, but there is some substantial rally space between those 2 points, between $3 and $3.73 for some short-term trading upside. So keep an eye on this one. Cameco, the major player in this space, it's also been consolidating here, right above the 200-week and the 50-week moving average. So it's in a very good place right now. It's just waiting for that signal to move higher. If it can break above 12, 13 area, that's your sign that the next leg higher has begun. It's got a lot of positive internals here. PPO is above zero. It's above the 50 RSI, consolidating above these moving averages. So Cameco is the leader in the space, and it's suggesting that uranium is setting up. Blue Sky Uranium, one of these penny sheet stocks. So Blue Sky, it's been in a downtrend since middle of 2016, and it looks poised to break out higher. And it's consolidating above the 50 RSI as a speculative play. This one has tremendous upside potential. DYLLF, another one of those penny stocks that's has done really nothing over the last 2 years, but it's been consolidating in a very, very positive fashion despite the weakness in this overall sector. It's now above the 50 RSI, found support right here at the 38 level, which is where it found support in times past, so no surprise there. And although you can't see anything here, I think if it can break above that 35 level, it can run and you can see double digits, not double digits, but certainly above $1 in the next renewed bull cycle here. Denison Mines, it's just been consolidating, very choppy action. I don't like this action. There's not really much to say here. Obviously, it's going to rally if the uranium sector breaks out, but until it's above that 200-week moving average at 68, there's really nothing to see here. Fission Uranium, FCUUF. This one as well, it's got a good fundamental story behind it. It found support here at the 30 RSI, where it's found support here and here. So no surprise that it's rallied. I like the follow through that it's had last couple of weeks, but it's got a lot of overside resistance. So as a trade, this is interesting towards 50 cents, possibly 60 cents. But as a long-term opportunity, until it breaks that 200-week moving average, currently around 62, there's really nothing to see here. Our favorite chart in the space has been Encore Energy. We were long around this area around 5 cents. We rallied to 14, cup and handle, bullish consolidation right now, and we broke out higher. Now this was your buy trigger, and now we had a pretty strong pullback. The question is this a retest or is this a fake breakout? We will see this week. If it's a fake breakout, it'll close below this trend line here, and you want to exit this position from a trading perspective. If it rallies here, you want to see a break 15 cents to really confirm the new leg higher. Bottom line is, this is an interesting risk-reward play with a stop loss below 10 cents. This is a great opportunity to add here as a retest is taking place. Now, gold mining has a very interesting uranium option mine based in Canada, and so I'm going to keep this in the space. It's not a pure uranium play by any stretch of the imagination, but it's got the chairman of this company is the chairman of UEC, so there's a lot of connection there, and so it's worthwhile taking a look at, especially considering the positive price momentum that's taking place here. Now, it did pull back some at the end of the week through some profit taking, but you see momentum has broken out considerably on the RSI, and from my perspective, with PPO now really firmly above zero, this can be a multi-bagger in 2019. I could see this run to $2 easily without much of a change in the direction of gold or uranium. So it's really fallen considerably on tax loss selling, and now it's rallying very hard. So a really nice play and optionality on both gold and just slightly on uranium. You've got Laramide Resources, another one that's consolidating above the breakout zone. I like this one, but I don't like that it closed the week below the 50 RSI, just ever slightly, but it's above the 50-week moving average. It's right below the 200-week moving average. It's got a lot of upside potential should the uranium sector break out. Keep an eye on this one. A couple more names. I've got Next Gen Energy, one of the best fundamental stories in the space. The price action has been very weak. We do think that if this breaks above $2, it has enough internal energy to make a run towards 3 and then higher when the sector is ready. But right now, it's just a watch, put on your watch list. And finally, for those gambling degenerates out there, Westwater Resources, it's been a stock that's been killing investors for many, many years. And I just want to point this out because a lot of folks are asking about it. It did break out on an RSI from an RSI perspective. Obviously, it's still in the downtrend here. But when RSI starts breaking out, it's something you want to watch. If it can break this point on RSI above 38, I think that this trend line will be broken. And once this trend line is broken, it becomes interesting. I could totally see this break out, make a run towards 31 cents, which would almost be a double from here, retest this down to 25, and then if this is a legitimate breakout, move higher. So keep an eye on this one. There are a lot of profits to be made, but make sure you know the fundamental story behind it. I don't know what its balance sheet looks like. They've been known to dilute considerably, so be cautious with all these names. Diversification is key to maintain your capital long term. All right, guys, thank you for watching. Stay tuned. We're going to try to do a precious metal sector review. Gold, silver, platinum, that's an area in the markets that are really bullish right now, so a lot of great opportunities long term in that sector as well. Thanks for watching and have a great week.